Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 1st, and we'll take just a brief minute to discuss what equity markets did last week as the S&P 500 had another positive week, up 1.06% on the week. The mid caps were up 0.83% or 83 basis points on the week, and the small caps were the leader last week, recovering a little bit, up 1.50% or 1.15% on the week. And another recovery there as we started to see the market starting to broaden out last week as we've gotten some corporate earnings in from the financials, and they were very, very good. And the guidance there was, and the outlook was optimistic for these. And so you saw the end of 23, the broadening out of the equity markets. You saw it follow through for about the first week or so of 24, and then fears of recession and that coming in 24, the Fed not cutting rates in time came in, and then you saw a return back to those mega cap tech names that were really leading the way up until October of last year. And so we're getting those earnings this week, and we got some on Tuesday night. We got Alphabet, Microsoft, and while not part of the Magnificent Seven, a beneficiary of the AI boom has been AMD as well as NVIDIA. And we got Alphabet, Microsoft, and AMD's earnings on Tuesday night. While the earnings themselves were fantastic, the question that was held is, where do they go from here? They've already been up here, and a lot of news has been priced into these stocks already. And so when they provide great earnings and great earnings growth and great revenue growth, what investors then are going to be stuck on is not necessarily what are you doing for me today, because we've priced that in already, but what are you going to be doing for me in the next quarter, 6 months, and the next year, and where's that growth catalyst going to come from? And you saw the outlook for several of these kind of guide down a little bit or miss a metric one here or there. And the thing is, when you have everything priced into your stock, all the good news priced into your stock, one bit of bad news can take you down 5%. And that's what you saw happen with some of these mega cap tech names, where the guidance wasn't exactly where analysts had expected, or metrics weren't exactly quite where analysts had expected. You saw some of these tech names down 5, 6, 7% on the day yesterday. And we were heading into weakness yesterday, and then at 2 o'clock we did get Federal Reserve Bank Chair Jay Powell released the statement at 2 that rates remained unchanged, but at 2:30 he had a press conference. And about halfway into his press conference, he did say something along the lines of, they believe that a March rate cut was off of the table, and you saw equity markets sell off a little bit into that. Although there was pressure on the mega cap tech names anyway going into that, and if you were to actually look at the market yesterday, the equal weight 500 actually outperformed the S&P 500 even though it was a negative day. And so what that's telling you is that you're seeing investors and others, well, these Magnificent 7 or 6 now that are doing so well, you may not see them sell off dramatically. I mean, a 5% move is nothing when you're up 50% in 1 year. So a nice little pullback, or 100%, or in some of these cases 200%. You will see some volatility here, but they become sources of funds at that point, and then you take your funds from there, and then you cast a wider net and you broaden out to find some stocks and equities and companies that are producing great revenue growth, great earnings growth, but haven't been participating in this market rally this year and last year. For whatever reason, they were beaten down because of circumstances, or they had a bad quarter, and there's opportunity there. And so what investors are doing now, as we continue to get economic data in that is not supporting of a recession on the horizon, you're seeing more confidence for investors to say, let's broaden out and invest more and continue that broadening out that we saw at the end of 23. The other thing is, it's okay that they're not going to cut in March. The Fed wants to see a little more progress in inflation and make sure that the economy is still holding up. Because what they don't want to do is cut rates prematurely and then allow and reignite the economy and allow inflation to rear its head again. Because what they want to do is they want to make sure that our strong economy remains that way. We have core CPI 2.9% and Fed funds rate at 5.5%. We anticipate a cut this year. It may just not be in March, as they just want to get more data. And by the March meeting, they're going to have two CPI reports and two unemployment reports before they meet again in March. So as always, if you have questions about how to navigate this time or how to cast your net wider or what to look for in the equity markets, feel free to give us a call. We'd love the opportunity to speak to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much for watching.